Aloha, 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 aloha. How's everybody doing? So I hope everybody's having an awesome day. This is 50 pips, rocking and rolling here. 05/10/2014. Not making trade calls or recommendations because you and only you're responsible for the trades you may decide to take. And the fact that you're listening to this means you've read, you understand, you accept all the disclosure disclaimers on the blog, understanding that we're just performing some technical analysis in a learning context for educational purposes only. So what's going on? We had an interesting week last week, and it's probably going to set up to be quite an interesting week this week. In terms of the data front, we got a couple of central banks on the wires and some decent information coming out, right? So keep in mind that it's a Chinese bank holiday on Monday, and we'll have some German factory orders and some Canadian and New Zealand data on Monday, but Monday fairly quiet day. Then the bank holiday continues in China on Tuesday, and then the Tuesday starts to be interesting because we do have a monetary policy statement out of Japan, and we do have a cash rate. So the RBA is going to be on the wires with a statement. We do have a BOJ press conference and some UK data. So clearly, starts to shape up for some interesting moves, especially seeing the extended moves we have on the commodity currencies. Then Wednesday, we have FOMC, fairly light until there, but then we have the FOMC, so all eyes on Janet. And then basically we've got unemployment rate out of Australia on Thursday. We have basically the BOE on the wires with an MPC rate statement. We got unemployment claims out of the US. We got Draghi speaking. And then Friday to end the week, we've got all the unemployment data out of Canada. So clearly there's room for these moves to extend, retrace, or move, whatever, but for volatility to stay active here. So what to look for? I think a lot of people ask for a lot of different charts. I'm just going to try to go through what I think is more interesting as usual, trying to keep these sessions not too long. I mean, in terms of the ES, we're really at a key point, right? Because we've discussed the fact that we were a retracement, or retracements are healthy, and we had a very nice negative close on the daily here. Nice little indication, a little top here. We're expecting this to try and retrace, try and get some momentum back into the 100 DMA, and that's what we got. And then we start to press low, and we said caution because there are very aggressive buyers coming in, and we see this kind of action, you really have to respect it. So what's been going there, and you can see it even, actually let's make this a bit bigger. You can see it on the daily again. Now the fight is, you've got these buyers coming in, and we talked about this chop zone. This whole area is quite clear. If you drop down to 1 hour, 4 hour charts, you can see the fight defending the two areas. And what we said is, as long as we stay inside here from a daily close, the market is likely going to be looking for direction. Not sure whether it's going to try and retrace this move down or extend aggressively into the 200 DMA. And we said, the risk was clearly for a move back into the 1900s. But once we got this candle, we said you have to respect this. This is looking very bullish. It's most likely going to get some kind of retracement, and bam, we've popped out of this zone. So going into the week, look at action around these 1955s, this whole 1955 level. And basically early in the week, if the market can get some traction below and hold below, close the daily below, then we might be taking some stabs back down at these lows to continue this extension here. If not, what it looks more likely is probably that we're just going to try and move back down into that previous resistance back into those 70s, and then we'll have to see if we'll have some kind of, you can see it on the lower time frames. It's very similar on the NASDAQ, if it's trying to put in some kind of downward channel, or if we're going to retrace back up. But clearly keep in mind, most likely we'll see a lot of choppy trades, and do not be surprised, for all the people who've forgotten what volatility is like and what moves are like, don't be surprised if we get 30-40 point moves in a day, right? So that's what we were looking at on what we were saying on the ES, and the action is fairly similar on the NASDAQ too. So the NASDAQ chart's very similar, and we've got a chart on the blog on the NASDAQ too. What's going on gold? And basically gold, what we said is that we were holding heavy, and that this break back below these lows was a very, very bearish signal, and most likely price was going to try and correct all the way back down to the 1200s. We also said, that if we had to close our eyes and hold something for a year or something, we'd more be interested in getting long rather than short gold. But we said that as we saw this action here, unless we got a daily close back above this breakdown volume, it was a bit of a sucker's game to try and get long. best wait for more interesting levels and back at that 12,000 level. So that's exactly where we are. So I'm going to be watching very closely what's happening this week. Daily close below the shaded area, then this is going to be looking very, very, very bearish. If we can close back above the 1200, we might get some tradable bounces, but clearly this is the zone to watch on gold. And you know, if you're looking at silver, it's a very similar discussion. You know, once it broke below those lows, there's not a lot of edge. Silver usually ends with, you know, a lot of pain at the downside, some long wicks. Best wait for the right opportunity. They're not the kind, these are not the kind of patterns or the kind of markets where you want to try and aggressively buy into a falling market, especially on gold and silver. You know, the retracements will be healthy, and I'm sure, you know, sooner or later they will pop. And if you're looking at a longer term horizon, it might be starting to get interesting to look to build some kind of swing long, but clearly you want to keep some powder dry and do that slowly. In terms of the on the Forex side, what are we looking at? Well, you know, yen pairs continue to see some wheeling and dealing. If you look at Euro JPY, I think it's a lot more interesting than USD JPY. I mean, it would be healthy to see some kind of retracement on USD JPY, and we got a bit of that, but then it ramped back higher. But still, I think it'll be interesting to look for some kind of failures. What's interesting on Euro JPY, on the assumption that yen is going to stay weak and that euros got sold off very, very aggressively. If you're looking to play some kind of a bounce on euro, you know, this might be an interesting place to look for it. But clearly keep in mind that the moves have been a lot tighter here. And as long as we stay inside these 138.90s and these 136.20s, this is a big chop zone, and it might be a very interesting place to look for positioning. But as long as these lows hold, you know, we could easily see a pop back higher. It doesn't mean it's going to go all the way to the moon, but you know, this is clearly an interesting zone. Is this 200 DMA keeping weight on it, this descending trend line keeping weight? You've got this whole support coming in. I think this is going to be an interesting zone to keep an eye out for. You'll have some tradable ranges inside this, and maybe the breakouts will be quite interesting. That's one of the most interesting things in terms of the yen pairs. Apart from, also, I know a lot of people have been asking me this GPB JPY. You know, what we said is that when you get this kind of action, you see this negative close on the daily with this huge wick, you really have to respect this, you know, so you really don't want to get aggressively long against this kind of candle close or this kind of wick. Equally, it's not a super interesting candle for me to look to play shorts off, simply because the stops would be too wide. But anyways, nice indication that we're going to see some profit taking, and that's exactly what we got. So going into the week, you know, here is going to be very interesting to see if we're going to get some buyers coming in on pound sterling in general, and if this previous resistance is now going to act as support and will take another stab back into those highs, or if this level goes early in the week, then we could easily see a reaction that accelerates to the downside, and we're moving back down into this lower range and this whole area we've been trading in for a long time. So clearly, similarly to Euro JPY, we're in very interesting kind of sideways chop zone, which could be both tradable, a Euro JPY more tradable than this, but clearly important to give us a sign for direction. And I think those are really the most interesting things in terms of yen to keep an eye out for. What else have we got? In terms of the commodity currencies, the move has been very, very aggressive, and it's going to be very interesting to see how we open here. Clearly, so we'll start with the weeklies. You see this Kiwi, right? We're right back down into this base, and it's a super important point, right? Clearly, this could be very aggressive move to the downside, or we could get a little bounce here. You know, no matter what the RBNZ is going to do, they're going to keep on selling Kiwi dollars, whatever. Right here, technically, this is an interesting area because most likely, you know, it would be healthy to see some kind of bounce here, even though you could easily sell that bounce for a break lower if you're bearish on this. But right here, right, just a little bounce here, and then it breaks lower if it's indeed going to break lower. But it looks like it's trying to find some kind of support here. And if you look at it on the daily, it's interesting because it already started to try to to base here before the Friday action. You can see this on the 4 hour too, right? Before the dollar got a lot of strength coming in, it was trying to base, and then we got that sell off. You know, euro selling off, cable selling off, basically dollar strength across the board. But it's going to be very interesting to see if this whole zone is going to act as support, especially ahead of those lows, and the lows are going to continue to be protected. So right here, I think this is also an interesting tradable area. You know, this whole 76.80s all the way back up into the 79.30s, especially if we stay in range. Then we'll have to see how it behaves, but still should be a pretty tradable zone, especially if we can hold it on the open tonight. Another interesting area, and again, we can start on the weekly, is Aussie. You can see very heavy here. Are we going to put in some kind of fake breaks, double bottoms, and a little pop or not? You know, clearly pressure is going to stay on. But another interesting zone, if you look at it on the daily here, it just pierced through. So the question, when you see this kind of action, you know, the big question is going to be, how are we going to open? If we open heavy overnight, then don't be surprised to see this accelerating very quickly all the way back into the 85.40s. But if we can't break below those lows and hold below those lows, I wouldn't be surprised to see basically 87.70s come relatively quick too. Also a tradable area. Keep in mind that we've got a rate decision out of Australia. We've got a lot of data out of Australia, so this is clearly going to be an interesting pair. I'll definitely be very focused on all the commodity pairs this week. CAD2 for sure. And, you know, also the big question on CAD is going to be the way basically USD, the strength it's getting, you know, are all the data that are going to come out of Canada going to start to be looking as good as the ones driving USD, you know, and then that could mean that we could get a healthy retracement in USD CAD. So that's something that I'd definitely be looking for, keeping my eyes on this week. And then what else have we got? If we're looking at cable and euro. So what's going on cable and euro? So cable, we moved back down, and what we said, we kept on saying the pattern looks very bearish, right? Looks extremely bearish. Not, you know, we got that first bounce here. This is a weekly, by the way, at the 100, 200 DMA. Then we sold off, and even though it was trying to base, we still, even on that rally back up, it just kept on closing at that gap down zone, and it couldn't get any traction. It was looking very heavy for a retest of lows. Now we've come back down. It looks like it's trying to hold the 59.50s, and this is going to be a very important point going into the week. Now, I would not be super focused if we just print below 59.50. So, you know, if we print 59.45s or 40, I'm not too, it's not going to be like sell it after this aggressive move down. If you look back to the past, you see we've broken below this area before, and we've had some action here, and it didn't really get some traction. So keep a close eye on here. And what I want to see is how we behave into the open. Clearly, if we start getting traction below and we hold below these lows early in the week through MPC and everything, this will likely be very heavy. And we're starting to look at a possibility of this retracing all the way back into the 152.30s. I know a lot of people are going to be telling me we're at a 50 back, so I'll just put it up just to make sure I don't get questions, so I'm aware of this. So clearly it's at a 50 back. It's a confluence 50 back of this move with this whole support with the 59.50s. You've got the two moving averages. You know, if you look at it, it's a key level. It's been a key level for a long time, this whole zone. You can look back on the chart, and it's been a pivotal zone in the past, right? So clearly it's an interesting area. So if you want to try and have some other intermediate line on your chart, you know, something which may be worth looking at is those 57.20s. That is the 61.8 retracement line. So clearly, you know, if you want to look at a short-term target in terms of the bigger picture, I was looking at the bigger picture since because we're on the weekly, but you know, right here, look for pressure on for 57.20s to attract. If we can hold above that, then look to see some kind of little rally, possibly to move back into the 61.90s, etc. Keep in mind that unless something fundamentally changes in terms of data and the way the market is looking at things, unless something hits the wire, most likely most of the bigger players will be looking positioned to sell rallies on cable, on euro, etc. Last but not least, what's going on Euro? Well, what's going on Euro? We're still stuck in that range. You know, what we said last week too is we're talking about the fact that it was holding very, very heavy, that all these breaks below the 57.80, there was a risk for a move back into the 24.60s, okay? Now, just as a reminder, the 24.60s, it's not a fib, but I know a lot of people like to look at these, so I'm putting it up. This is the 78.6 of that move from lows to highs. It's not something I would be looking at as a tradable level really, but I know a lot of people look at that, so we'll keep it. Just mention that. So right here, we said there was clearly a chance for a break all the way back down, but we shaded this area saying price can move extremely quickly inside the zone. We need a break outside for the next big move, right? So right here, it looks like the 25.00 is being defended, and as long as the 25.00 is defended, we could see some bounces, we could see some shorts covering, we should see a little squeeze. I suspect that at this point, the shorts are going to be looking to sell into every round number, you know, to sell into 26s, 26.50s, 27, etc., etc. Right here, from a weekly perspective, I think what's important is that if we start below 24.60 early in the week, we could clearly see that next acceleration back down into those 121, 120 levels. If we see some kind of support here, some profit taking, then it would even be healthy to see a little move back into the 27.80s, 28s, even if it's to get back sold, but it would be healthy to see a bit retracement after this aggressive zone. I would suspect there'll be people talking about all kinds of oversold indicators here, or readings on oversold indicators. I mean, keep in mind, stuff can, just as the market can remain irrational longer than you can stay solvent, so that goes for overbought and oversold too. Will they correct sooner or later? Yes. It's not a question of if, it's just a question of when, right? You know, markets tend to revert, retracement happens, price doesn't only move in one direction forever. But right here, Euro has been pretty much moving in one direction for a long time. So sooner or later, it will do the opposite of what it's been doing recently, okay? So that's pretty much it for the week. Keep in mind, again, the moves have been pretty extreme last week, and there'll be people looking to try and extend them, and there'll be a lot of people looking for the moves to normalize for some kind of healthy retracement. So it's an interesting week. I think it could have been a lot more painful going into the week if we didn't have any data flow, because the market would have probably just continued in the most recent direction, and it could have got even more ugly. The fact that we've got some data flow coming out should give the market some more data points, some more excuses to maybe react in a bit more of a healthy manner. So that's what I'm going to be looking for going into the week. I wish you guys an awesome rest of the day, wherever you may be, whatever you may be doing, an awesome week, and I'll see you guys on Twitter and on the blog. Thanks for listening. Have an awesome one. Bye-bye, guys.